Well, the first thing they're doing is offering investors courses on how to trade, how to value a company. And the second thing they're doing is trying to prevent too much volatility in the market by limiting the amount that shares can move on any given day, up or down. So for instance, if the share price is between 20,000 and 40,000 kyat, it can only move by 5,000 kyat per day, up or down. If it's between 40,000 and 100,000 kyat, it can move up or down by 10,000 kyat per day. So I think investors will lose confidence in a market that is too much extreme volatility. So I think this is a sensible decision by the exchange. Well, now there's two companies listed. The first company to list was First Myanmar Investments, FMI as it's more commonly known. It listed on March 26th, very successfully. Initial listing price of 26,000 kyat. It closed on the upper limit at 31,000 kyat for the day. Following on from that trading, it reached a high, I think, of 41,000, and since then it's fallen back to be, today it's 27,000 kyat, I just checked it. But given the listing price was 26,000 kyat, I still see that as a success. I had good trading volumes. Now the second company to list is Myanmar Tilawa SEZ. It was already a public company. There was no money raised. Likewise with FMI, no money was raised, just a listing. It also had a very successful listing. It went up 10,000 on its listing on the maximum per day. And it's getting some decent trading volumes. So we have two successful listings so far. Yangon Stock Exchange listing criteria are not very strict, in comparison to, say, the Singapore Stock Exchange, the AIM market, even the Catalyst, although that doesn't have any strict rules per se. But you only need a minimum paid up capital of 500 million kyat, which is about 400,000 US dollars. You have to have been profitable in the last 2 years, good corporate governance. You have to have a compliance officer making sure the company complies with the listing requirements. You have to have complied with the Myanmar tax laws. You must have filed your tax returns and paid your taxes. The stock exchange is only looking to list profitable, well-run companies. And they took a lot of time with FMI, interviewing management, going quite into depth. They're not looking to have any fly-by-night companies. They really want to see this as a long-term success. And so if you're a growth company, it's not going to be the market for you per se. If you're not making money, you have to have made money in the last 2 years. So I think that may be a challenge for some companies. If they've lost money in any of the last 2 years, they won't be eligible for listing, regardless of how profitable they may be in the future, or the investors may see them as being profitable in the future.